Hello everybody, my name is Alash Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my weekly thoughts on market happenings for the week ending June 17, 2022. Looking at the stock indexes for the week, the TSX, Russell 2000, S&P 500, NASDAQ, and the Dow Jones Industrial Average were all down after a down week, punctuated by a very bad Thursday. Oil was also down, with only gold up for the week. The S&P 500 had the worst week since the month the pandemic was declared. The TSX had entered correction territory, down more than 10% from a recent high, while the S&P 500 had entered a bear market during the week. Bonds are doing poorly as well because of the rising interest rates, and it is very rare to have both stock market and the bond market down. On Wednesday, the US Fed raised interest rates by a very big 0.75%, the biggest rate hike since 1994, but this seemed expected following a quote-unquote leak of the hike amount to news media, another way of supplying information in addition to the usual Fed minutes and speeches. The markets, once the 0.75% rate hike was announced, went up. This was expected to dampen inflation and has the Fed reasserting its authority and showing courage. The markets had priced in the 0.75% hike before it happened. The US Fed is looking to raise 3 to 3.5% by the end of the year. The US is at 1.5% now. The outsized raise was most likely because of the big 8.6% inflation reported for the year-over-year number for May. The central banks can't look at CPI only because it is a trailing indicator and the rate hikes take time to take effect. So just a quick note. On Monday, June 13th, the ravages of high US inflation, expected interest rate increases, and a possible recession continued the market's hefty declines from the previous week, some indexes losing more than 4% in one day. The recession is mostly priced in at this point, and many experts think the odds of a soft landing without a recession are slim. Only 2% of economists think a recession will happen in 2022, however, partly because of the relatively strong jobs market. The rest think 2023 or 2024 is the year for the recession, but I think the latter is so far out that it is unrelated to what is happening now. Interestingly enough, the US bond market is pricing in a fairly low long-term inflation going forward, and so I expect inflation to moderate after this spike. The next Bank of Canada meeting is in a month on July 13th, where Tiff Macklem will try to steer the country away from the pain of April's record 6.8% inflation. Looking at the US inflation numbers of 8.6% for May, Canadian interest rate increases may be significant. There is speculation that Canada will raise the interest rate by 0.75% as well, following the US. But it may be that we will end up at only 2.75%, only 1.25% from where we are currently, unofficially not being able to raise as much as the US due to the Canadian household debt. As interest rates go up, it's looking more like the central banks might overshoot and cause a recession if we aren't in one already. Remember, a recession is 2 quarters of negative GDP growth. It seems to be expected to be a shallow recession, of course, and that the central banks might even cut rates now that they have a cushion. Turning to inventories and retail, inventories at retail stores are high because retailers double ordered last year to get goods, which have now arrived, and the goods are going on sale to encourage the consumer to buy. The consumer generally has a job, but perhaps their net worth is down thanks to the market, and their mortgage payments are higher, or their rent is higher. A University of Michigan consumer survey in the US has come back with a low consumer confidence. U.S. retail sales for May are down 0.3%, which was a surprise, so consumers are slowing their spending. Further, it looks like the growing salaries and wages are going away, with expectations of raises and a lack of workers being resolved. People will be happy to have a job in 6 to 12 months from now with the looming recession on the horizon. We are expecting a 0.5% rate hike for the next few times on both sides of the border, and as the inflation finally cools during the summer, let's say August, the hikes will pause and the central banks will reassess. Following this week's 0.75% US Fed rate hike, between now and then, another 0.75% rate hike might be scary to the market because it has a large impact and implies even a bigger emergency than the 0.5%, and would have a bigger impact on loans and mortgages. This will also not fix the supply chain, labor shortages, and the high price of oil. The US 10-year government bond is now yielding more than 3%, and while this yield is so high, it will hamper stock prices since it is a viable alternative to stocks and their dividends. The US also reported weekly job numbers, and the jobless claims fell to 229,000, but housing starts fell 14.4% in the US, more than expected. The Canadian real estate market also continues to cool, with average selling prices $100,000 less than 3 months ago and back to pre-pandemic levels, with a 20% lower volume of sales. Turning to next week, Canada's former tech darling BlackBerry will be reporting, along with Accenture and FedEx on Thursday. FedEx can be seen as a bellwether of the consumer economy because of all the deliveries they need to make. Q2 earnings reports will begin in July, with some expectation of weakness and downward revisions. Next week's economic events start on Tuesday with core retail sales reports in Canada showing consumer spending and confidence. Wednesday is going to be a big day with a report for Canada showing month over month and year over year CPI changes. So that is inflation for May. And on Thursday, we have the US continuing jobless claims. That concludes my thoughts for the week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.